Most traders don't fail because they lack information. They fail because they can't handle the truth. The truth is brutal, silent, indifferent. It doesn't care how much you know, what book you've read, or which strategy you copied. You can study every indicator, memorize every setup, master every chart pattern. But none of it will save you when the market tests your discipline. Because when that test comes, and it doesn't arrive with warning. It doesn't forgive hesitation. It doesn't reward emotion. It simply eliminates what doesn't belong. And the overwhelming majority of traders get swept aside for one simple reason. They violate the principles they swore to follow. Not once, not twice, but endlessly. They cut corners. They move stops. They trade on impulse. And they call it strategy. So when the final trade goes wrong, they act surprised, as if the result was uncertain. But it never was. It was only a matter of time. The cycle of false confidence. Every trader begins the same way. They open that first position, take that first small win, and suddenly it feels like they've cracked the code. Money flows in and confidence explodes. Seems easy. Too easy. A few trades go right, and they start believing the market listens to them. They confuse randomness with skill. That first profit is not a gift. It's a trap. Teaches the wrong lesson. That luck and timing can substitute for structure and patience. It's the most dangerous moment in a trader's life, when early success convinces them they're unstoppable. Overconfidence sneaks in, and overconfidence breeds recklessness. They size up too fast. They ditch their limits. They start believing that if it worked once, it'll work again. But the market doesn't owe them consistency. It doesn't recognize past performance. It only reacts to price and action, nothing else. The reality check. When I started, I thought I was different. I was winning trades, stacking returns, and I believed the losses others faced were just lack of knowledge or courage. Then the market taught me humility. Execution lagged. Spreads widened. I was no longer playing in a sandbox. Reality hit, and it hit hard. The strategy didn't fail. I did, because arrogance has no place in this business. Confidence without structure isn't confidence. It's exposure. It's a countdown to disaster. The true goal. Most traders make the same fatal mistake. They think the goal is to be right, but the real goal is to survive. This isn't a race to the top. It's a test of endurance. The traders who make it to year 2 aren't the smartest or the most informed. They're the most disciplined. They understand something critical. Small wins teach nothing, but a painful loss studied properly can save a fortune. The market doesn't care about your early streaks. It only cares about what you do when you're tested, over and over and over again. The most expensive mistake. There is one error that wipes out more accounts than any other. Holding on to a losing position just a little longer. Start small. A few ticks against you. You think it's fine. It'll come back. Then hesitation sets in. Fear whispers, don't close now. Wait. You rationalize. Enlarge the time frame. Scroll for news. But deep down, every tick deeper is not just market movement. It's your discipline eroding. You're not holding a position anymore. It's holding you. And when you finally close it, it's not a trade anymore. It's a self-inflicted wound. I've been there. I've watched profits vanish into stubbornness. One trade, one hesitation. That's all it took to erase weeks of discipline. A small loss is a trade. A large one is a mistake. And the only thing separating them is time. The smartest traders aren't those who make the biggest gains. They're those who lose the least. Because taking a loss is strength. Holding a loss is denial. Discipline and the trading system. Most traders never build a real system. They follow feelings, signals, strangers on the internet. They trade by hope, not by plan. But hope is not a hedge. Hope is poison. Without a tested, repeatable system, every decision is emotional. And emotional decisions have no edge. They only offer illusions, temporary wins that collapse under pressure. A system doesn't have to be complex. It just has to be yours. It must tell you when to enter, how much to risk, where to place your stop, when to exit. And most importantly, you must follow it every single time. Because success in this game isn't about predicting the future. It's about executing your plan, even when your emotions scream otherwise. Without a system, you're not a trader. You're a spectator betting against professionals. And the house always wins. The invisible enemy. Emotions are silent destroyers. They don't shout. They whisper. They whisper things like, hold it a bit longer. Don't stop out yet. Double down. It's bound to reverse. Fear and greed, two sides of the same trap. Fear keeps you frozen when you need to act. Greed pulls you forward when you should wait. Fear makes you take profits too early. Greed makes you hold losses too long. Emotions distort logic. And if you don't tame them, they will own you. Discipline doesn't mean feeling nothing. It means acting correctly in spite of what you feel. That's what separates survivors from the rest. The myth of size. Another fatal misconception. Bigger size equals bigger profit. That lie has ended more trading careers than any bad strategy ever has. Size doesn't amplify your edge. It amplifies your mistake. If your structure is weak, size becomes a weapon pointed inward. I never entered full size on my first move. I tested. I waited for confirmation. I let the market prove me right before committing. If the trade worked, I added. If it didn't, I stepped back. This wasn't hesitation. It was survival. Over-leveraged traders don't lose because they're wrong. They lose because they can't afford to be wrong. Risk isn't your enemy. Mismanaging it is. Proper sizing is what keeps you alive long enough to learn. One oversized position can erase years of progress. Don't let that happen. Losses. The mirror of your system. Every trader loses. It's non-negotiable. The question is, what do you do next? The amateurs look outward, blaming news, brokers, or bad luck. Professionals look inward. A loss isn't failure. It's feedback. It's data. Every loss asks 3 questions. 1. Did you follow your plan? 2. Did you size correctly? 3. Was the setup valid? Ignoring those questions is the most expensive choice you can make. Pain teaches, but only if you listen. Most traders don't. They hide from the numbers, shift blame, and move on unchanged. That isn't learning. That's denial. And the market punishes denial relentlessly. Losses are unavoidable, but wasted losses are optional. Study them, record them, refine from them. That habit alone will do more for your career than any new tool or strategy. The disease of overtrading. The urge to always be in a trade is deadly. It feels productive, but it's pure noise. Activity isn't progress. Patience is. Learn to sit out. Learn to wait for alignment. If the setup isn't clean, if conditions aren't right, stay flat. Doing nothing is often the most profitable move you can make. Most traders can't stand still. They fear missing out. They chase motion because silence feels uncomfortable. But every unnecessary trade chips away at focus, confidence, and capital. The professionals don't chase. They wait. They act when the market meets their criteria, not when boredom whispers. You aren't paid for effort. You're paid for precision. Takes strength to watch the market move without you. Takes power to wait for the wave that fits your plan. If you chase every wave, you drown. If you wait for the right one, you ride it far. Borrowed conviction. Opinions are everywhere. Everyone has advice, predictions, secret signals. But none of those people will pay for your losses. When you trade based on someone else's conviction, you're giving away the only edge you have, your independence. I've done it. I've heard confident voices, followed their sure things, and paid the price. Not because they were always wrong, but because I didn't understand their reasoning. I wasn't trading the market. I was trading their opinion. The result? Confusion, frustration, and no ownership over outcomes. You can learn from others, yes. Study them, observe them, but when it's time to act, your trade must be your own. If you can't trust your analysis enough to execute, you're not ready to risk real capital. In this market, followers don't win. Executors do. The law of survival. Cut losses, let winners run. Every trader knows the rule. Cut your losses short. Let your winners run. Everyone repeats it. You live by it. Under pressure, they do the opposite. They close the winners early and hold the losers long. Because fear whispers, take what you can. And hope whispers, it'll turn around. Both lies sound reasonable. Both destroy your equity curve. This rule isn't a motivational quote. It's the foundation of longevity. You can never control rewards. You can only control risk. Let the strong trades expand. Kill the weak ones early. If you can master just this, you'll instantly rise above most traders. Not because you found a secret, but because you had the discipline to apply a law everyone knows but few obey. The edge is not hidden. Most traders waste years chasing secrets. They search for hidden indicators, perfect entries, unspoken formulas. But the truth is simple. There are no secrets, only behaviors. The edge isn't something you find. It's something you build through discipline and patience. The real differentiator isn't a tool or algorithm. It's consistency. It's the quiet habit of doing the right thing again and again, even when it's uncomfortable, even when it's boring. You don't need more information. You need less noise. Focus, structure, and emotional control will beat knowledge alone every time. The edge is not hidden. Most traders waste years chasing secrets. They search for hidden indicators, perfect entries, unspoken formulas. But the truth is simple. There are no secrets, only behaviors. The edge isn't something you find. It's something you build through discipline and patience. The real differentiator isn't a tool or algorithm. It's consistency. It's the quiet habit of doing the right thing again and again, even when it's uncomfortable, even when it's boring. You don't need more information. You need less noise. Focus, structure, and emotional control will beat knowledge alone every time. Closing, the path few walk. If you've made it this far, you've already separated yourself from the majority. Most won't listen this long. Most don't want truth. They want shortcuts. But shortcuts collapse the moment pressure appears. Now you know what truly matters. Discipline over prediction. Structure over impulse. Risk control over emotional reaction. These are not tips. They're principles. They do not change. They do not age. They do not forgive. Every trader faces the same choice. You can chase, guess, and fall like the rest. Or you can observe, execute, and adapt, and survive long enough to reap the rewards few ever see. The market doesn't reward belief. It rewards behavior. Follow your plan. Protect your capital. Respect your stops. And when you take a loss, learn faster than the market can punish you. In time, you'll learn what every veteran eventually understands. The market was never against you. It was teaching you, testing whether you deserved survival. So fix your habits, not the market. And you may find that the mirror starts reflecting something else. Not chaos or fear, but calm, mastery, and control. Stay sharp. Trade with structure. And remember, in this business, what you do is what you are.